Hello traders, this morning's scanner gave us a couple of short alerts. 3 to be precise, 2 alerts left on. Our only concern this morning, proximity of support. The short on S&P currently sitting at the end of the minor trend. Next level is the key. Just to remind you where the short coming from. This is a level we identified in the course since yesterday morning, not the place to buy S&P, the place to short S&P from. This is a place where S&P pulling back from, all present in the room for weeks, all identified in advance. Institutional resistance. And this is S&P right now, taking a massive pause at the end of the minor trend. Shock or not. Identical precision, identical accuracy. Choice is yours, what you want to trade. So this level, this key support, the end of the minor trend currently on S&P on this short is a problem. This is exact same support in a play currently as key resistance on euro. Buyers are weak. Prior key support 2018, currently key resistance on euro. With key support 110 next. That's identical structure on S&P now. The only difference, you trading this, you trading euro, you holding position for hours and days. You shorting this with the help of a scanner, being on defense, you holding position for minutes, not days. Identical short. We knew extremely well since yesterday that this is not the place to buy. Choose a tick, selling pressure in a play. This is the level we're watching carefully now. No matter what time frame on S&P you trade. Trade is not on one. Trade converted to 1 minute on purpose. Knowledgeable trader taking profits off the table and start trailing outside of break even. If you are trading a couple of lots on S&P, one lot, 2 points, $100. 5 lots, 2 points, $500. This level is crucial. And if buyers step in with vengeance, knowledgeable trader is not surprised. We knew that in advance. Knowledgeable trader never throws trades in the market randomly. One tick in day trading makes a world of difference. Everyone clear on this? Choose a tick. Shock or not. The most important rule you learn and play in front of you right now. Exact same place where buyers step in on euro. Shock or not. Euro for the last few months. And that's S&P right now. Identical level to the tick. This accuracy is a reason hedge fund managers in the course now. This is a reason Day traders in the course now. Ultimate accuracy, ultimate precision. With the help of a scanner, stress-free trading. So here's Tesla now, traders. Chart present in the room for years. This is where sell-off on Tesla came from. And this is key Fibonacci support, the end of the wind-up trend on Tesla. There is no surprise where Tesla rallying from, exact same level as on Euro, as you just saw on S&P, to the tick. So this is Tesla 2 years ago. This is key Fibonacci support 255 on Tesla and key Fibonacci reversal zone 388 on Tesla. This is Tesla a year later. Continue respecting key Fibonacci support and reversal zone. 255 lifeline on Tesla, 388 area is a reversal zone. 255 key support is crucial. This is Tesla next. Getting ready to crush through. Key support next. And that's exactly what Tesla had done. All identified in advance, never after the fact, just like S&P, just like Euro. Here is oil, traders. This is oil now. This is oil, bullish rally in 2017. This is where oil sold off from. Ultimate trend inception. And this is oil 4 years, 3 years ago. Oil at trend inception. Do you remember oil at 29? This is oil a year later. Starts picking up the steam. This is oil 2 years later. Heading higher and higher. What do you see ahead? Fibonacci reversal zone, not the place to buy, the place to short from. And that's exactly what oil starts doing. Just like S&P this morning. And that's sell-off on oil. As I say, 64 is out, 55 is next. And that's exactly what plays out on oil. Oil in free fall. All in advance. Never, ever after the fact. If you want to day trade oil, not a problem. Identical accuracy apply. And that's a crash on oil from Fibonacci reversal zone identified months in advance. And when buyers stepped in from ultimate trend inception, there is no surprise. Exact same thing as S&P had done on Monday. And where oil pulled back from is exact same thing as on S&P, the end of the minor trend, the place to exit longs, the place to short from. And where a buyer step in on oil, there is no surprise. It's institutional reversal zone. All in advance, never after the fact. And that's S&P now, still frozen at key support. And that's exact same rally on S&P this week. Ultimate institutional trend inception. And that's exact same sell-off on S&P from the end of the minor trend where recently oil sold off from, when euro sold off from. Identical key Fibonacci resistance. All in advance, never after the fact. No matter if you trade 5-minute chart or daily or weekly or monthly, choice is yours. And if we take a look on day trading gold, identical trend inception. As on S&P, as on oil, ultimate place to buy. And if I take a look on gold daily, this is ultimate trend inception, as we identified in the course since early spring. If you're holding position for days or weeks or months, ultimate place to buy gold. Now bullish rally overextended. Gold is stuck for the last few months. But if you're holding position for weeks, months and years, you're using weekly chart as hedge fund manager in the course who trading gold does. Buying gold at ultimate trend inception in 2018. Gold taking a massive pause. All present in the room for years. And if I take a look on gold few years ago, this was gold. In 2016, ultimate trend inception. Do you remember gold at 1200? Stunning start of bullish rally, flawless. And when gold reaches key Fibonacci reversal zone 2 years later, that's where gold sold off from. And that's the power of Fibonacci that no indicator on the planet can do. All in advance, never after the fact. So this is a chart what it looks like at the place of the exit on your shorts. Not the place to enter short, the place to exit short. We're on standby for long while taking a well-deserved break. And so here's the email from student this morning who is trading gold. During European session, gold established key support and at 7 a.m. application of the principle showed possible trade entry and target 1424. System gave perfect entry, perfect target. Gain of 3.82 minutes in 2 minutes. Boom. Thank you for teaching me. I learned more every day. Choice is yours. What do you want to trade? Thank you, Bill. So take a look where we've been stuck for the last hour, traders. Ultimate bullish weakness, ultimate pullback. Again, let's convert this chart back up to 5. This is a flawless reminder. Accuracy of the method. Nowhere to exit your short, nowhere to monitor for long. Bullish weakness remains, traders. Market stuck completely. So here's LL, lumber liquidators, traders. This is where lumber liquidators sold off from, and this is exhausted sell-off on lumber liquidators. This is the range on lumber liquidators. Price is struggling to push through this resistance. Sell off, taking a massive pause. This is where knowledge will be tested to the core. So here's US dollar, traders. This is a bullish rally on US dollar 2019. ultimate trend inception, and ultimate overextended rally. This is where US dollar sold off from 2017. This is where overextended bullish rally now, taking quite a pause. Identical structure, identical bullish rally on S&P this week. Charts are twins. It's all the same. Right now we are stuck at the end of the minor trend. This is a problem. This has been the range on S&P for over an hour. Buyers are weak. That's a problem. We know that. This Fibonacci level said so in advance. So hello traders, so here we go. We've been stuck in massive chop at key Fibonacci support on S&P. Flawless place to exit, not to enter. So please pay attention to accuracy of the method. Knowledgeable trader right now placing stop buy order, not limit, not market. Choose a tick here. This one tick will make a world of difference in trading. We know that extremely well for the following reasons. Market extremely high. This is a dance on S&P for the last 2 hours. Exit on short, not the place to exit, to enter short. Exit short, look for long. This been a major problem. We're quite aware of that. Right now, this one tick makes a world of difference. If this range remains, it means market in pain. This is a stepping stone to the upside. There is absolutely no weight, there is absolutely no problem when S&P at institutional support at ultimate trend inception. On the bottom. Where a knowledgeable trader monitors for long. This morning this is a problem. 2 hours of this. One tick now. Shock or not, scanner gave the alerts. Did we know or did we know that this would make a world of difference? Of course. That's the power of the method. We stayed out through so much junk, we stayed out through so much pain. We still remain extremely high. Correct? Not at the bottom. We're a flawless place to buy. So when the scanner gives multiple alerts for the trading room, I can bring up only one. All sorts of shorts playing out on gold. 10, 15, 20 alerts can be playing out at the same time. For the trading room, I can bring up only one. Stress-free trading with ultimate precision. So this is the problem in front of you. This is the end of the minor trend. Exact same level. Gold been respecting for the last 3 hours. However, now gold giving us alert on short. Shock or not, it's flawless. Massive numbers of shorts on gold playing out. That knowledgeable trader takes advantage of. None for the previous 3 hours. S&P respecting the end of the minor trend. Shock or not, we are extremely high. Never forget that. About the importance of key Fibonacci resistance, yes. The end of the minor trend remains a problem this morning. This is the range for the last 2 hours. Identical level as on Apple, as on Euro, as on oil, as on gold. Shorts on gold in a progress. Outside of Fibonacci support for the last 3 hours. If S&P will finally start crashing through, it will be a gift. That's what knowledgeable trader wants. To be as low as possible, at least at this support. For the previous 2 hours, every single short at this support fails. Where you exit your short. No matter how spectacular all the earnings in 2018 had been on Netflix, Netflix kept crushing because Fibonacci reversal zone blocked bullish rally on Netflix. Spectacular earnings don't mean a thing. What means everything is what Netflix will do at key Fibonacci support. This is next on Netflix. 315. This is the range on Netflix, half of 2018. Between reversal zone and key support. Stunning earnings don't mean a thing when Netflix finally crashes through Fibonacci support. Boom. So why in the world has Netflix collapsed more than $140 per share? One reason only. Fibonacci reversal zone is reached, not the place to buy, the place to exit long. So why in the world is Netflix rallying? Because Netflix reaches key Fibonacci reversal zone all months in advance, never after the fact. And that's Netflix next. Struggling at the end of the minor trend. This is a problem. For 6 months, 2019. All identified months and years in advance. Never ever after the fact. And this is Netflix now. Netflix selling off again and again and again. Because as you learn in the course, this is a place to exit, not to enter your long. And what Netflix will do next at this support is crucial. However, ultimate place to monitor for long is trend inception, Fibonacci reversal zone. No matter how stunning the earnings are, Netflix continued its free fall. Place to buy the bottom, not the top. As spelled out well in advance, well before price reaches reversal zone. And this is S&P right now, stuck and frozen at key Fibonacci support for the last 3 hours, not a place to short. So if price not crashes through, trader will continue being tested to the core. Market remains frozen in the middle of the trend. So if you come to courses page, you can view and choose the option that's appropriate for you. Alpha Fibonacci Method shows you where to enter, where to exit, when not to trade. Group course is 12 weeks with recorded classes. A private mentoring 6 months that includes all group classes and software available for you. NinjaTrader 8 is a free charting platform. If you don't want to trade on NinjaTrader 8, you can simply use software for all the scanners, for all the alerts, with trade recognition tool. You can view videos, 80 plus videos, and 9 modules 24/7. If you need to take time off, not a problem. If you would like to start and restart course, not a problem. The only thing I'm asking you, if you're considering private mentoring, pretty please speak with me first, as private mentoring booked weeks and months in advance. So if you have any questions, do not hesitate to call or email me 925-257-4298 or info@fibinstitute.com.